This is Carrie Johnson with the Iowa Department of Management, and this is part 4 of a 5-part series talking about setting up tax increment financing in the property valuation system. And this is particular to the 2019 year. And what this particular segment is going to talk about, this part 4, is going to talk about TIF valuation and revenue, how TIF valuation is determined and how TIF revenue is calculated. If you are interested in more general application of the property valuation system, there is a series of webinars that talk more generally about the system itself, inputting data into the system, and things of that nature. This is part 4 of a 5-part series that really focuses on dealing with TIF in the system. So, like I said, this particular webinar is going to talk about TIF valuation and revenues, how valuation is determined and how revenues are calculated. So calculating TIF base and increment valuation. Obviously, your system is going to do some of this work for you, but I do think it's really important for you to understand how TIF is actually being determined as far as the value. What is the system doing behind the scenes? And that helps you have a better understanding of the TIF formula and what exactly is occurring. How are we arriving at these different numbers? Just as a side note, utility property, your gas, electric, and utility is not included in the calculation of TIF. It's not on the assessment roll, so it's been excluded from the TIF revenue calculation. What you're going to do with the following TIF formula is enter the valuation for each pair of base and increment taxing districts into the formula. And then you add them up, add up all those base and increment pairs if you have multiples in a particular area, and that would help you arrive at the maximum amount available in an area. Again, this formula is going to calculate for you, for this particular base and increment pair, what's the maximum amount that it could generate for TIF revenue. So when we look at the TIF formula, we have letters A through F. A is the frozen base valuation, 100% frozen base valuation. B is 100% budget year valuation. So A, of course, is, what's the frozen base? What was the value prior to this TIF going into being? And B, as the budget year valuation, is okay, in this year that we're working in, what is 100% value now? C is the amount of the budget year rollback. So in this budget year, how much rollback in valuation numbers are we looking at? D is the taxable value in the budget year. So applying that rollback to that 100% budget, what is the taxable value this year? And then E and F is going to be, E is our base, our calculated base valuation, base district valuation, and F is our calculated increment district valuation. So F is really the number that's used for that TIF revenue, right? E is what the base district gets, so what everyone's going to get to tax against. F is the value that's used by the increment to generate TIF revenue. So the calculation then is A minus C equals E. So frozen base minus budget year rollback equals the base year value, because rollback always comes off of that base district, not the increment. And D minus E equals F. So if we subtract D, take out our base year value, what's left then is F for increment. So again, column A is at 100% assessed frozen base, and column B is the 100% budget year value. Just as a side note, if A minus C produces a negative amount, you use 0 for column E. Okay, so let's walk through an example. So this is, of course, using smaller numbers than what you'd probably normally see. But say we have a property that's just fully commercial. There's $100,000 in value initially. So our frozen base is $100,000. But now, say it's 3 or 4 years later, there's $300,000 of value, 100% in this, couple years later budget year. And we know it's commercial property, so there's a 90% rollback. So A, of course, is that 100,000. That's the frozen base. That's what it was a few years ago before the TIF started, $100,000. But we say, okay, now we're a few years into this TIF project, and now the value is 300,000. The C, of course, is the rollback. How much rollback are we seeing in the budget year? That's 30,000. So then we subtract out and find the taxable value. So what's the taxable value? If you apply the rollback in the budget year, what's the taxable value of that property? And then we do an A minus C equals E. So that's our base value, what the base gets to keep, because the base is what it was, but we subtract off the rollback. So the base is going to keep $70,000 to be taxed against. And then the increment, of course, D minus E equals F. So that's 200,000. So basically that increase, that incremental increase in value all goes to that increment, right? So the number that's going to be used to generate incremental revenue, if this particular entity was taking everything they could, would be 200,000. So a formula example 2, residential property, again with that 100,000 in value initially, so frozen base of 100,000, but say it's a few years later and the value now is 200,000 in the budget year. Residential property, we know typically has, in recent years, been a rollback around 50%. So we're just going to say a straight up 50% rollback for ease of calculation. So our frozen base value, of course, was at 100,000. That was what it was a few years ago before any TIF happened. It was 100,000. Now, a few years later, it's actually valued at 200,000. There's $200,000 of value in this particular instance. If our rollback amount is 50%, we know that the rollback is 100,000. And then our taxable value, what's left, of course, is 100,000, right? So A minus C is going to give us our base value. If we do A minus C, 100 minus 100 is going to leave us with 0 for the base. So there's 0 available for the base to tax against. But then we do D minus E, $100,000 in increment. So the increment again captures all that growth. The rollback is applied to the base, which in this particular instance goes to 0. So we determined what our potential valuation would be, right? If someone were requesting the maximum and getting all potential revenue, we would use that formula that we discussed to arrive at that maximum potential value needed to get the maximum potential TIF revenue. Well, TIF revenue itself is that taxable valuation divided by 1,000 times the tax rate. I mean, we know that's how tax revenue in general is calculated, right? Well, for TIF revenue, we're going to use that incremental valuation divided by 1,000 times the net consolidated tax rate, because the law provided for some protections of certain tax rates from being included in TIF revenue, because we know TIF revenue is a diversion of revenue from the original levy authority to whoever's doing the TIF. So to the city. The city is going to capture the revenue, that diverted revenue from all the other levy authorities' tax rates. But some certain things are protected, and that's where we get that net consolidated tax rate. So the net consolidated taxing district rate is, our regular total rate, but we subtract out debt service. So any entity in that area that is using a debt service levy, there's protection for that debt service levy. So that entity gets to apply that debt service levy to the increment, and they get to keep it instead of it being diverted to the city. Also protected are the school physical plant and equipment levy and the school instructional support levy. So those two levies are also considered protected. The schools get to apply those levies to the incremental value, and they are not diverted to the TIF authority. So just as an example, here is an example of a tax district and all the levy authorities that you might find in one. County, of course, a school, an ag extension, an assessor, city, community college, the state rate, which is the brucellosis tuberculosis rate or the cattle tax, and then a total. So here's, this gross consolidated tax rate list is just what's the regular rate that all these folks have adopted. This is all their regular rate that arrives at this total consolidated rate that's applied generally. But for the TIF rate, we're going to subtract out some of those protected by statute rates. So the TIF does not get debt service. These folks still retain debt service as it applies to the incremental value. And also the school retains its PEPL and its ISL. So the rate for calculating TIF revenue, what that TIF authority is going to get in diverted revenue, is actually going to be the gross consolidated minus all those protected rates. So we'd take out, again, we'd add those all together, and we'd take out any PEPL, ISL, and any debt service. And the rate to be used for calculating TIF revenue is this 26,97330 in lieu of the 32,27,330. So some TIF authorities do request less than that maximum available. Remember, when we did the formula, we calculated, okay, this is all that this incremental situation could provide in revenue, right? You always start with that, like what is the total that could be provided? But some TIF authorities actually request less than that maximum. They have enough TIF cash on hand to meet their current obligations. They're, only want to capture so much TIF revenue in a particular year. They don't want to capture everything available. So when this happens, unneeded TIF incremental value must be diverted back to the base value at the time that those January 1 valuations are certified. So when you work in our system, what you're going to be submitting is the valuations needed to generate the TIF revenue as requested. In some cases, it is the maximum. Folks are requesting the maximum, but in some cases, it's not. So just sort of make yourself aware that what you're submitting is the incremental value needed to generate the TIF revenue as requested. For each year and for each TIF area, make sure you're reconciling the amounts of certified TIF indebtedness with the amounts of TIF increment previously apportioned and paid in the current and what's estimated in the upcoming year. Again, use those forms for reconciliation to make sure you and your TIF authority are on the same page with what's been paid out, what's being paid in the current year, and what's projected to be paid in the upcoming year, in the budget year. In the end, make sure that there's no more TIF tax paid to a TIF authority than there is certified TIF indebtedness by TIF area. That is the county auditor's duty per Code of Iowa 403-19.5. So when you do calculations of TIF revenue and you submit your valuations into our system, you want to make sure that you're taking a look at our system and what's listed for the estimated TIF revenue report. You want to make sure you take another look at that and make sure it's generating what you expect, what you expect to be generated in those particular TIF areas. First, though, in order to run a report that provides that estimated TIF revenue for the TIF areas in your county, the current year TIF rates need to be populated. The system should populate those rates for you. If for some reason you go in and the rates aren't appearing or they're not appearing for the current year, you can go down to the bottom of the screen and click Populate Rates. But again, those should be there for you. An important side note, you do need to enter the TIF rate for any newly created TIF increment district in the new valuation year. So DOM has on file, obviously, for any tax districts, increment districts that were in the system in the 2018 values. We know what those tax rates are. We've pulled those over, we populate those for you. But if you go into the system now in 2019 and create a brand new TIF area or just even a new increment district, you're going to need to calculate using that estimated, formula and make a determination on what that protected TIF rate is and do a calculation of what that rate needs to be and enter that into the system. So you'd go to the TIF Area Revenue option on the left-hand navigation. And again, it's going to populate for you the rates that we have on file for the current year. Those will all be listed for you. So if you don't have any changes, this will do that next step of the process for you. But if you do have a brand new increment district, it's going to show you a 0. So you're going to have to enter the estimated rate for new increment districts and then do a save. And so then when you have done that, you are able to go to reports and run a TIF area revenue report. And again, take a really close look at this. Make sure that the increment value is matching what you show on your local system and what you understand to be needed to generate the revenue that you're estimating. Do a comparison. Is the estimated TIF tax revenue by tax district and by area what you're expecting from doing the work in your local system? Does that match what the expectation is from your TIF authority as far as how much revenue is going to be generated? And then another report to look at under the reports menu is the TIF increment valuation report. And this is just going to show you, again, just the value for each and every TIF increment district that you have in your county. So double check those numbers, make sure that the numbers are matching your local system and that they're what you expect that's needed to generate TIF revenue. If you have any questions about working with the TIF areas or taxing districts or working with the TIF revenue within the system, please contact me.